What is up, gang? It is I, Carlton Flowers, your crypto pro.
Yay!
And today we have an important update on XCN, and we're going to talk about a few lessons learned. All right, of course, I must state that this is definitely not financial advice. I love to read the charts, and I use TA to make predictions on what's going to happen, but nobody can say with 100% certainty of which way the market or any project is going to go. So please keep that in mind. All right, so since the last update, we have had some incredible correction action happening with the XCN chart. Volume is high, but of course there are some things happening out in the cryptoverse that are affecting prices across the board. And that would be the AI, what is the name of it? I can't remember the name that the Chinese came up with and kind of outdid our US developers on AI. Okay, there it is. It's the DeepSeek. So basically what happened, we're trying to lead the world with AI, and then China comes up with their new version of DeepSeek. And in a fraction of the time, with a fraction of the amount of money, they improved upon the functionality of the AI model. And so a lot of the AI agents and AI projects have taken a hit along with everything else across the board. And so some are calling it a black swan event. I wouldn't really say that it's a black swan event, but it is pretty significant because our chief competitor, China, they took a major leap forward after our tech giants like Google stated that we are 2 years ahead of the Chinese in the development of AI. So they said, hold my beer. And they came out with DeepSeek, unleashed it, and it is open source. So it's not even protected, copywritten, being hidden from other developers. It's wide open for anybody to see. And they showed us that they can produce a model that is faster, more efficient, and did not take a fraction of the money that it cost for the projects here in the United States. So anyway, all that to say, it's affected the price across the board. Now, what is the lesson learned? Okay, the lesson here is that anything can happen in crypto. You could have these black swan events or whatever that can affect prices, and nothing is guaranteed. And we have to go back to the rules. The rules are never buy into a run, because that's the quickest way to get yourself wrecked or make you wait a long time before you get back to break even. And so your chances of, say, profiting quickly when you're buying into a run are a lot less than when you buy something that is in the accumulation or consolidation phase. Now, what does that mean? Well, accumulation means that people are buying like way back here. You see all this flat action, you can't even barely see it because it's before things started to pop off. Accumulation is when people are buying quietly and price is not moving. And then you go into the consolidation phase. That's where you get a little bump up. We saw this action happening right here, consolidation. And this was where I was going to buy back into XCN because I sold the bag for a 3X long before. I invested that into other projects that made me a good return, but I got out. And so then we have the markup phase. That's when price goes parabolic. This is markup, all right, as we enter into the bull market. And it is best to buy when you're in the accumulation phase, right? When everything is quiet. If you miss the accumulation phase, you can still make great gains in the consolidation phase. And then, of course, in the markup phase, when you buy, it's risky. Okay, so if you bought after this pump right here, you did good. It went up again. If you bought at this pump, you still made some gains. I bought right here at 3.3 cents, but just a small amount because I FOMO'd, and I'm human. I made the same mistake that everybody else did, where you think, oh man, this train is leaving without me and I'm going to miss out. But knowing that I was violating the rule to never buy into a run, I thought, well, let me just get a small bag. Enough to at least get my foot in the door and keep this little bag in front of my face should things correct and go down. All right, so then, of course, we had the parabolic move where we nearly hit 5 cents, and there's a lot of people that bought up here at that peak. There's probably somebody watching right now who bought at 5 cents, and then the price went down, and they're wondering, what the heck? What am I going to do now? How long will I have to wait for this price to come back up? Now, while we were in the bullish romp, in the chat, a lot of people were saying that after we surpassed 3 cents and then 4 cents and then almost hit 5 cents, that it will never come back down again. We'll never see 4 cents again. And I said that, okay, this crypto project is like any other, and in normal stock trading or crypto trading, you go through these phases, and after you have a pump, you correct and you find a support. It must come back down to firm market structure. What does that mean? Well, let's jump to the 4-hour chart and show you what that means. So first, when we made that initial run, which is this action right here, we popped up, and then we had a consolidation move. That's the time that it took from the end of this pump all the way to right there. And then it pumps up again. And then we find new market structure where we form a base at the peak of the last run. There's the base right there. See that little base? And that becomes market structure. So this should end up being a strong support. And that price is somewhere around 1.6 cents. Now, of course, you can go down to the point of control price. That's at 1.3 cents. I think that would be the worst case scenario, but everything is all about probability. I can't predict the exact points that this will bounce off and find support. So we have to go to probability. So now up above this, we did have another high point that could have been the base of support. A lot of people were banking on 3 cents being that base of support, that we would never go below 3 cents again. But lo and behold, we violated that line, and now we're in this strike zone box that I created right here, and we touched upon the 50 EMA here on the 4-hour chart. That 50 EMA just magically coincides with this big volume node, which is the VPVR. That's the volume profile visible range. So of the visible range of price action on this chart, this big node says there was a lot of buying and selling going on at this price. And a lot of that is automated buying and selling. The biggest node is at the POC. That's the point of control price, where a lot of the institutional investors were coming in heavy. A lot of buying or a lot of selling. Now, where does it go from here? I don't know. We have not entered into the oversold zone yet, with the stochastic kind of down here headed towards the 20 line. But both of these oscillators are going to need to dip down and then come back up. Now, what I always teach people is that you can tell the direction of a trend by looking at the stochastic peaks. So here's how it works. When we look at this stochastic peak, we returned this price here. When we hit the next stochastic peak, which was descending, we came back up to the same price right there. When we hit the next stochastic peak, we hit this big price here. At the next stochastic peak, we hit the all-time high. What does that mean? It means that for each stochastic peak, the price was trending higher like this, okay? Now what we need to look for is what the price will be at the next stochastic peak. Here's what can happen. Well, the price can come up again and form a new all-time high after this stochastic comes up, and we'll see, well, what is the peak price at the peak stochastic? And if this stochastic peaks out here and we have a new all-time high, that says the trend is still intact. We're moving upwards. However, let's say the price comes down and then back up, and we bury our heads right here and bump our head on the top of this support and resistance zone, and then it returns down. And at the same time, let's say the stochastic peak came all the way up right here and then went back down. Well, that means that there is a confirmation of a downward trend, because at the stochastic peak, we print a lower high. Now, I don't know what's going to happen yet. That's why I'm just waiting and watching. But there's another rule that you can apply here. And this really works for me. And I have profited from this rule for many years. And what that says is, if you miss the run, okay, if you didn't buy in down here and it did this and you had not bought, instead of buying at the peak, deploy patience. And the rule states, if you miss that run, they'll always come back down to pick you up. Most of the time, 90% of the time. So now we see that we are in a possible downtrend. We're definitely trending down right now. We came back to this strike zone box and we are below the price that I bought this little bag at 3.3. So it's dipping down to come back and then give us another chance to slap up some more XCN before the next run. Now, we are in a bull market. So there's a good chance, the highest probability, is that the uptrend will continue. Now, how high it goes, I don't know. I haven't looked at this chart enough to tell you what is possible at the peak price. We'll just have to wait and see. Some people say 10 cents. I've heard 17. Another person swears on their mother's grave that it's 77 cents because of the Fibonacci lines. I don't know what it's going to be. But I do know one thing, we're probably going to gain. And even if you did buy at this peak right here, if you wait long enough, you're probably going to be able to sell at a profit. But the best way to do this is to buy during the time that the stochastic is in the oversold zone. So it would have been great to buy right here, right there. Let's do a circle. Here's where you buy. Here's a point where you buy. Or you could buy here, you could buy here, and if we dip down into this zone, you would buy right here. Now, let me tell you where you don't buy. You don't buy at the peak stochastic. Don't buy there, don't buy there, don't buy here or there. Your greatest chances of making a gain, okay, a quick gain, is when you buy your tokens down here. When you get below the 20 line, all right? That will increase your odds. So as far as where it goes from here, I'm thinking there's a good chance that we could be looking for this volume node right here. That's the highest probability. And we're just above that at 2.67 cents, but this volume node sticks out at 2.2. These volume nodes tend to snatch price up or down. Okay, so that's our highest probability. We might hit that point and then it goes back up. So we could fool around here and find support. If we find support at the bottom of this box, okay, price could go up. This volume node right here could be support. Okay, now the next probability is if we fail this volume node, it's going to look downstairs for the next one that sticks out. That's right there below 2 cents. Worst case scenario, and the lowest probability is going all the way back down to the point of control price. Time will tell. Work with the probabilities. Don't look for somebody to tell you exactly what price it's going to be because they don't know. All right? And I hope that you found this valuable. And if you think that these simple explanations will help you navigate your way, well, you can hit the like button, you can tick the bell, subscribe so you don't miss any of my future videos, and I'll keep you posted. And if you're one of those that said, well, he talked for 10 minutes and didn't say anything, yeah, well, don't waste your time posting in the comments. We don't need to hear it. Let's just leave it alone. And for the 700 people that just subscribed since the last few days because of the action on XCN, welcome aboard. Let's have fun. Let's have a good time. Ride this out for maximum gains, and we'll keep you posted on the price action. That's all I've got for now. This is Carlton, and I am out.